Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So I hope you guys are enjoying this volatility. We have had a nice long stretch of really uh, significant moves in this market. Yesterday was a very busy session following the midterms. Today, not so much, but still a lot of names moving around in really big ranges, right? And that's what we love as traders. So today I want to talk about Etsy and how this really fits what I like to call the earnings combo trade strategy just perfectly. And with these earnings trades, right? Like sometimes you have a lousy setup that works. Sometimes it's a great setup that just doesn't work. I mean, everything can line up perfectly, and then it just doesn't work. But then you got other scenarios where you have like a really great setup and it works perfectly, and Etsy fell into that category. So I wanted to talk about it. Also, like this is one of the trades that we spoke at length about in the coaching session earlier the week. So I thought it was like a good time to kind of follow up, go over it again, and just really highlight why the setup was interesting, and like the price targets. So first off, there's two main things that really seemed to indicate like a good earnings combo or volatility strategy for Etsy. And the first is you can see in these highlighted bubbles, this is the moves that Etsy had on earnings for the 3 quarters so far this year. So this was in March, so February to March, right? June, and then August. So what you can see is, so the first thing you notice is, yes, all of them were higher, right? But also this move, say a little bit above $5, so like 5 to 5.25 was the magnitude of the move. Here, about 11 and a half or so, and back in August it was about 8. So there's a clear direction in the momentum of the earnings, which is higher, right? And almost more importantly, for what I look at, it's the stock has a really consistent history of moving. So when you average these three moves together, so 5.25, 11 and a half, and 8, you get a move over 9. So that's one of the first things that really stood out to me with Etsy. Second, technicals, right? So what you notice about Etsy is had a huge gap in June, right? Up through 40. And then since that move, it's defended 40. So like the 39 to 40 level really, really well. Held, held, assaulted it again and held. And then just head of earnings rolled over to it again. So what that's created is just this really great technical support level with a extremely well-defined gap down to 32 to 33, right? So when I look at it, with the stock trading say 41 to 42 going into earnings, that to me says if it loses 39 to 40, so if it slips up, right, and it breaks 39, that means you're looking at a move. The really only key level is 32 to 33. So you're looking at possibly like an 8 to 10 point move underneath, right? So underneath 39 to 40, you get 8 to 10 points to close this gap. Now on the upside, what also stood out, right, is 45 to 46 area, because this is set up head and shoulders more or less, right? Shoulder, head, and then now back underneath 45, setting up the right shoulder. So 45 to 46 is critical because not only is it the right shoulder, but you also have the 100-day and the 50-day in that vicinity. But if Etsy were to get through 45 to 46, kind of similar to 39 to 40, right? What's above it? And really the only clear level above it is 52 to 53, which was the previous high and basically was the double top that set up the retracement here. Because there really isn't anything significant above it. Once it clears this is really the obvious level. So from the low 40s, a move up to 52 to 53, you're looking at 8 to 10 points. So when I look at the chart, I see these are the two things I want to really like drive home. What I see is a stock that consistently moves on earnings, right? average greater than 9 points each of the 3 quarters. So I mean, 9 points average. It's had large moves this year, 9 points on average, and there's visibility on the chart for possibly 8 to 10 points lower, and then 8 to 10 points higher, right? So coming into this week, I had that on my radar, and then when I look at the options, the November 16th straddle, it was only pricing in about 7. So to me, like that seemed kind of light, right? Because the stock has averaged greater than 9 points, and the chart, right, shows visibility of an 8 to 10 point move. So it seems that there was some disconnect between the option pricing and the potential move here. The fundamentals and the technicals indicated that there could be 8 to 10, whereas the options were only saying 7. So that's why I thought a volatility strategy was an interesting bet, because options seem underpriced compared to the potential move and what the chart said. So I know volatility is a volatility bet is a straddle or a strangle. In this case, I went with the strangle, just because it's a better way, or I feel it's a better way to manage risk. So you can it's typically a lower debit layout. So in this case, the options, they weren't cheap; they were priced in 7 points. So this was a way to kind of get risk in line with like the parameters I have for this. So what happened, right? Fast forward, Etsy beat, and what you can see really clearly, got through 45 to 46, and then it was just a quick line to 50 to 51. So this is the first really quick move. That was about a 9 to 10 point move, right? And that allowed us to roll up, cut risk, and roll up on the first day. And then the secondary target was a retest of the 52-week high above 53, and then today it followed through and hit that. So after 2 days, you're able to like close out the trade. And options that were pricing in 7 points ended up moving greater than 13. And that's really, that's the benefit of screening for these types of setups, is that there is, mispriced options out there, but it has to do with, combinations of, screening for what the stock does historically, and also, really important are the technical levels. So the options can say one thing, but then, when you see the historical action and all these like really well-defined technical levels indicating something else, well, I'm going to go with the historical action and the technical levels, because I've seen those work time and time again. So I hope this is helpful. Not every trade, again, not every trade works out the way you plan it. Some just don't trigger. Sometimes they just go a little bit, and they don't really reward you. But then in other cases, you get like an Etsy where the way you draw it up is exactly how it plays out. So it's nice. It's nice to get like these quick moves, because then you can cut risk, especially in the market that you get these big back and forth swings. So maybe tech and financials and energy earnings season winding down, industrials too. But now we're kind of going to get into the retail portion of earnings, which over the last couple quarters has been really, really volatile. So, even though maybe the heart of earnings season's passed, there's still a lot of volatile names set to report. So lots to look forward to. So I hope you guys have a great night. Best of luck if you're planning anything this evening. And I'll talk to you all tomorrow.